Silence for 3 seconds.
Hey everyone, and welcome. If you're running a small business here in Canada, you already know that tax time can feel, well, like you're trying to find your way through a maze in the dark. But what if you had a roadmap? Today, we're going to dig into some really practical, amazing tips from Evelyn Jack's book, Make Sure It's Deductible. The whole goal here is to help you turn tax season from a major headache into a real strategic advantage for your business. So let's kick things off with the one question that's on every business owner's mind. Ah, yes, the million-dollar question, right? For so many entrepreneurs, this is a huge source of stress. You're out there spending money to grow your business, but how can you be sure that the Canada Revenue Agency, the CRA, is actually on the same page as you? Well, that's exactly what we're going to clear up today. So here's our game plan. We're going to walk through the 4 key stages of your business's tax life. First up, we'll talk about laying the right foundation from day one. Then we'll get into the nitty-gritty of your day-to-day expenses. After that, we're going to level up and talk about strategies for involving your family and your staff. And finally, we'll cover how to stay prepared and basically build a solid defense for all your deductions. You know, just like building a house, you have to start with a solid foundation. And it's no different with your business. Making those smart, tax-savvy decisions right from the get-go is absolutely crucial for your success down the road. So let's get specific. When does your business actually start, at least in the eyes of the CRA? It's not just when you have that brilliant idea. The CRA has a very specific checklist. You can see it here. Just doing some preliminary research for a hotel, that's a no. But taking actual steps, like applying for a license or buying materials you plan to sell, that's a definite yes. And knowing that official start date is so important because that's the moment the clock starts ticking and you can begin claiming expenses.
Okay, another massive decision you make at the beginning is your business structure. And one of the key differences between a proprietorship and a corporation comes down to your fiscal year end. If you're a proprietor, you're stuck with the calendar year. It has to end on December 31st. But if you incorporate, you get a lot more flexibility. You can pick any 12-month period you want. This can be a really powerful tool for tax planning, believe me. And here's something that is absolutely non-negotiable. Right from day one, you have to keep amazing records. The CRA isn't kidding around here. They expect you to be able to produce all of these documents, whether they're on your computer or in a filing cabinet. And the rule is simple. If you can't prove it with a receipt or an invoice, you can't claim it. It is that serious. All right, our foundation is set. Let's get into the daily grind. This is where the real magic happens, where you can turn all those everyday business costs into legitimate, money-saving tax deductions. Let's start with a big one of the most valuable deductions, but also one of the most audited, your vehicle expenses. Your number one job here is to keep a detailed auto log. This little template right here is your best friend. Every single business trip, every kilometer, you've got to write it down. I know it might feel like a pain, but trust me, the payoff is so worth it. So what's the point of all that tedious tracking? Well, this is it. It all leads to a completed worksheet like this one. You can see how it all comes together. You've got your operating costs like gas and oil changes, plus your fixed costs like insurance. This worksheet does the math and figures out exactly what percentage of your total car costs were for business. And when you see that final number, you'll get it. And there it is. Boom. Over $8,600. This is the actual value of the deduction from that worksheet. This is the reward for being meticulous. See, it's not just numbers on a page. It is real money that stays in your pocket. Okay, next up is another area that trips a lot of people up, meals and entertainment. The thing you have to remember is the 50% rule, but you also have to know when it doesn't apply. So look here, if you're giving away samples of your food product, that's 100% deductible. But taking a client out for dinner or to a hockey game, the CRA says you can only deduct 50% of that. But here's the good news. Staff parties, and you can have up to 6 a year, are 100% deductible. Same goes for meals you eat on a plane or train while traveling for business. Knowing these little details makes a huge difference. Okay, so once you've really nailed down the basics of your daily expenses, it's time to level up your tax strategy. And a big part of that is figuring out how to structure compensation for the people who are helping you build your dream, especially your family and employees.
Let's look at a real-life example to see what I mean. Meet Raj. He opened a restaurant and his whole family pitched in to make it a success. Come tax time, he wanted to deduct their wages to lower his income. But he got denied. Why? Because he didn't keep any records of their hours, and, this is the critical part, he never actually paid them a salary. He just planned to. And that's a huge, costly mistake. You can't retroactively claim wages.
So, how could Raj have done it the right way? Well, here's the playbook. You absolutely have to treat family members like any other employee. That means you need formal paperwork, you need to understand the big difference between an employee and a contractor, you need to make the proper payroll deductions for things like CPP and EI, and you should definitely look into providing some tax-free benefits.
And speaking of that last point, let's talk about tax-free benefits. Honestly, for small business, these are a fantastic tool. You can reward your team with things like non-cash gifts as long as they're under $500, or help pay for their meals or provide uniforms. And the best part is, these things aren't considered taxable income for your employees. It's a total win-win. They feel appreciated, and you get to do it in a really tax-smart way. All right, for our last section, let's talk about defense. You always want your relationship with the CRA to be proactive, not reactive. Being organized and prepared is truly your best line of defense against any potential audits or questions. And you have to understand, the stakes are pretty high. The CRA has been given a ton of money, over $1 billion, to crack down on what they see as tax cheating. And with conviction rates up at 95%, the message is crystal clear. You have to be compliant. Now, I'm not saying this to scare you, but just to really drive home how important it is to do things by the book. So what if you get that letter in the mail, the one that says you're being audited? First thing, don't panic. You can turn this scary moment into a totally manageable process if you have an action plan. First, be honest with yourself about any weak spots in your bookkeeping. Second, get all those detailed records we talked about ready to go. Third, call your tax advisor immediately. They are your guide through this. And finally, you present your case clearly with all your documentation organized to back it up. I really want to end with this powerful idea, which actually comes straight from the courts. It is so important to understand that smart tax planning is not tax evasion, not at all. It's about knowing the rules of the game. It is your legal right to arrange your business affairs in a way that means you pay the least amount of tax possible. You should think of it as a core part of your business strategy. So, we've basically given you the map today. Now it's your turn to actually plan the trip. And I'll leave you with this question to chew on. Based on everything we just covered, what is the one new tax strategy you're going to talk about with your advisor this year? Maybe it's finally getting serious about that auto log, or figuring out how to properly pay your spouse, or even just getting your shoebox of receipts in order. Taking that one next step can make all the difference.